Hello ladies and gentlemen, it is the Wonder Kid here. A warm welcome to this video guys. In today's video I'll be explaining to you different market conditions and how to understand what phase of the market we are in. Now, why is this so important? Well, of course, if you're a trend trader, you're going to want to avoid those range bound conditions, and of course that is easily said than done, but sometimes you will need to be able to zoom in and zoom out and understand what the Japanese candlesticks and pure price action is telling you. And of course vice versa, if you're a range bound trader, you want to avoid that kind of price action that is clearly in trending markets. Now, it is one of the things you will have to understand, of course, if you're very early to the game, that foreign exchange markets, they have all sorts of market phases, and sometimes you can be trending for a very long time and then have range bound markets for a very long time. So that's the kind of market behaviors where you'll have to understand when you want to sit on your hands versus when you want to be very, very active in the markets and be placing your orders at high probability entry points. So guys, I think one of the best ways to explain this is to hop on the chart. So guys, as you can see here, I've brought up a chart of Euro US dollar. Now, as you can see, I've put a little text box here on the side where I've essentially broken down market phases into 4 different types. So for me, it's ranging, channel, trending, and impulsive. Now, you can have corrective in there, but we'll go in essentially into those 4/5 different market phases in a bit more detail. But the reason why I've broken it down into these market phases is because it fits well with my checklist and my strategy that I trade. But again, sometimes it is very, very important to have the question at the top of your checklist: what market phase are we in, to help you to avoid those range bound market conditions if you're a trend trader, or vice versa if you're a range bound trader, to help you of course avoid those trending market conditions, right guys? So guys, let's have a look. So as you can see, I've just brought up Euro US dollar, and one of the reasons why I brought up Euro US dollar in particular is because it experiences all 4 types of market conditions. It experiences all sorts of types of market conditions at different points. So for example guys, we're going to talk about ranging. Now, ranging market behaviors is simply when we either going sideways like this. You can see that we're pushing up, pushing down. We might have some resistance level up here, some support level down here, and essentially we're bouncing in between the two, okay? Now, that is one type of ranging market behavior, but also I want to explain to you guys corrective behavior. Corrective behavior is essentially when you are moving in this kind of wave up. You can have this kind of ascending correction. So essentially you're breaking a high of a previous candle here and immediately retracing, breaking the high again here, up here, and then retracing. And what's happening here is that you can clearly see that there isn't that much momentum to the upside. You can see we are slowly creeping up. So again, when you have a market condition like this, which is what we call an ascending correction, moving into a descending correction, so essentially the opposite, you can clearly see that we are very, very shallow. We're not experiencing any steep trends like this. But essentially, if we're going from an ascending correction to a descending correction, you can clearly see, guys, we are still very, very range bound because the market essentially is not showing us any evidence where it wants to go, okay? So let's find a few examples of this on the charts here. So as you can see, guys, you can see clearly that we have obviously some ranging conditions here because essentially we're going sideways, and same again here. And can we spot any others? Well, yes, we have another one here. And of course, we have some more over here. You can see that we essentially are going sideways in these different 4 phases of the market. Now, if we look carefully, right, can we spot what I just explained? So you can see here, we're coming down, coming up, coming down, coming up, coming down. So essentially, this is just typical up and down, bouncing between essentially support and resistance levels in between, but we're essentially going sideways, right? Now, can we see any examples of corrective behavior? Well, if we look over here, we can see that over here, what's happening here? We've obviously had some impulsive action here, and then we've broken a high here, retraced, broken a high here, retraced, and you can see we're moving up in this kind of ascending correction here, right? And then what's happening after that? We broke a low here, retraced, broke a low here, retraced. So now we're moving in this wave down. Same after that, we're moving in a wave up. So can you see that here? We've got an ascending correction here, we've got a descending correction here, and an ascending correction here, which is ultimately defining your range bound behavior, okay? So again, this is something for you guys to essentially do. To take a look, what I've done essentially, have no indicators on the charts, have no colors, which helps you to see just the candlesticks purely, and analyze the raw movements of the candlesticks themselves. So can we see what kind of action do we have in this larger kind of range here, right? So can you see again, guys, we have come up here, retraced, and then we've come down here, retrace. We can clearly see we've got a wave up here, we've got a wave down here, we've got a wave up here, then we've got another wave down here, wave up, down here. We've got a bit of volatility here. I will cover that shortly. Again, and we're moving up here, and then we're moving down. So can you see, guys, we've got ascending into descendings, into ascendings here, into descendings, ascendings into descendings here, and ascending into a descending. You can clearly see that we are moving in between these kind of corrections, from ascending to descending corrections. And ultimately, are we going anywhere as a trend trader? The answer is no. So again, when you have price action like this, as a trend trader, I want to be very wary if I want to get into the market or not, unless I'm seeing some significant amount of momentum to show me where the market wants to go. Okay, so there you have it. That is, simply put, that is ranging kind of market conditions. Okay, now what we're going to talk about next is, of course, channels. Now, channels are essentially long, for me personally, long pieces of price action where we are still moving in one direction. So as you can see, guys, even though we identified these ranges here, we've got a range here, we have another little range here, we have another little range here. Can you see overall in the long scale, we are moving up in this ascending channel. You can clearly see that. Now, one of the things with channels is that if you want to break these kind of market phases down, in channels in particular, of course, you will also have not only ranging behavior, you also have corrective behavior, but you also have some sorts of trending behavior and impulsive action. So as you can see, guys, we've got some impulsive action here, or volatile action. The same again here, we've got an impulse up here, we've got an impulse down here, impulse up here. Can we see any evidence of trends? Yes, we've got some trending behavior here, but ultimately you've got a mixture of everything in a channel. But ultimately a channel is going in one direction. Okay, now why is that important? Well, as a trend trader, I want to understand, okay, if we're in a channel going upwards, is there any evidence that we are going to start to trend? Can I see that? Then of course I'm willing to get involved. But obviously, of course, as a trend trader, one of the things that I've identified that is very, very high probability is that when we move from an ascending channel, can I spot the beginning of a trend down? So as you guys can clearly see here, guys, we've got an ascending channel here in the longer term, and then of course we've got a descending. So for me, I would of course be very wary to try and find the beginning of a trend. So you can see we've got double wicks at the top. So for me, in my kind of naked chart work, where I'm just looking at price like this, not looking for any entry points, but just trying to understand, is there any price action here that will tell me that we are about to go down? And that's very important to understand, because obviously as a trend trader, not only is it powerful to join in a trend, but it is the most powerful to be at the very beginning of the trend. Okay, so that is something very, very important to understand. So again, like we've covered so far, in ranging behavior, in ranging market phases, you can have corrective behavior and of course just general sideways movement like this. But in channels, for me in particular, you can have all sorts of behavior, but essentially a channel is just generally price action that is moving along in one direction or the other. Okay, now let's move on to a market phase 3. Market phase 3 is trending conditions. Okay, so trending conditions for me are movements where we have strong movements in one direction with very little retraces. So for example, if we have a trend upwards, we're moving up with strong amounts of momentum, retracing a little, moving up with more momentum, retracing a little, and this is a clear uptrend. Now, why is this very, very good as a trend trader? Well, of course, you'll be taking advantage of very, very strong price movements. You can clearly see that this is what will help you with your risk to reward. You know, of course, we're here as a trend trader, you profit off volatility in the markets. So if you're seeing strong movements in price, then of course I want to ask myself, how do I get involved in that? Now, typically you can get involved in kind of breaks and retraces. So if you've got trending market behavior like this, you can clearly see that price comes back to a level, and we can look to get involved there. But essentially trending markets are strong movements with very little retraces for me personally, just like this. Now, can we see any examples of a trending market here? So as I said earlier, I can see this area is trending very nicely. So like I mentioned earlier, we can clearly see we've got this form of descending channel here. we have some corrective behavior here, but we started to trend upwards after it, didn't we? So we can see that we've got some strong movements upwards with some steep. If you were able to draw trend lines, you can see that steep movement upwards. So for me, of course, I'll be asking myself questions. Is there any price action around here that I could have got involved in to get in the start of this trend, okay? So of course, that is the trending market phase. Now, the last kind of market phase that I want to explain is impulsive behavior. Now, impulsive behavior is, for me personally, it's numerous candles. So not just simply one candle and a retrace, but numerous candles that are pushing very strongly in one direction. So for example, we can have some impulsive behavior here. You can see that we've got some more impulsive behavior here. We've got some impulsive behavior over here. This is very, very evident here. And same over here. You can see impulsive behavior to me is strong movements in price. Now, for me, you can clearly see in these examples that after we've had an impulse, we have actually reversed to the opposite direction. So same here. We've had an impulse down, had some corrective behavior and moved in opposing direction up there. Same again here, guys. You can see impulse down, bit of a range, and an impulse up, bit of a range. So impulsive conditions are essentially very strong movements in price. Now, why is impulsive conditions very good? Well, in a trend, sometimes and in some pairs, you will have these kind of impulsive conditions that lead on to the beginning of a trend. So can we find anything like that in this kind of price action here? So I'm just going to move this across here. So for example, guys can clearly see we had a very strong impulse here, and then we started to move down in this kind of corrective manner, but essentially we are still trending to the downside here. You can clearly see that. So for me, after this impulse, I'll be asking myself, is there any price action in here that I could get involved in to continue with the trend? Because obviously we have, this is impulsive behavior showing strong momentum to the downside. Okay, guys. Now, one of the things that I do want to explain is that you can, of course, have other market phases that you can on top of add onto this kind of list. So for example, you can have volatile conditions. Now, what are volatile conditions? Essentially, you can have candlesticks like these where you can clearly see news has come out. Now, how did I identify that these are news candles? Well, number one, you can see that you've got very large wicks to either side, and number two, you can see the amount that candle has moved versus all the other candles. Can you see all the little candles around it are very, very small relative to these couple of very large candles here. So that is very volatile price action. But also you can have volatile price action where you have a strong move up and a strong move back down. So that indicates, for me personally, that we are in volatile conditions, but it can also hint as a stop hunt. So can we see any examples of volatility here? Yes, I can see that we do have examples here. We've got a strong move up, strong move down, strong move up, strong move down. Especially here, you can clearly see here, guys, where you've got this extremely strong move up and strong move down with very few number of candles. You can clearly see there would have been a nice little stop hunt here. Why is that a stop hunt? Because of course you've got this descending channel here. You're starting to see this candle here particularly showing you strong momentum down. What will retail traders do at this point? They'll have some sort of order here with their stops just above it. And of course, what do the big banks do and the big money managers? That come take out all the stops and continue in that direction. Okay, so these are different market kind of behaviors that you can add onto this. Now, for me, I can add in V for volatility or volatile conditions in terms of market phases. But the reason why I haven't included that in particular is because at the very beginning of my checklist, I like to ask myself, are we in any of these four conditions? And once I answer that question, I can lead onto different parts of my checklist, okay? Now remember, guys, there's no one exact way to define your market phase. Just because I've defined it like this doesn't mean that you have to define it in the same way. But again, if you're a beginner and you don't really know how to define it so well, then maybe this is a very, very good starting point. So I think, that I've covered all the different types of market phases in this video. But as just a quick end to this video, I'll do some quick naked charting work with you guys to show you my kind of thought process when I'm doing this kind of how to read price action in the overall scale, and show you what my kind of thought process is and how to identify these different market phases. So guys, as you can see, I'm just going to move this up here so we get that out the way. So you can clearly see, guys, here we have some very volatile behavior here. We've got more V's here, we've got V's here, we've got Again, corrective behavior here, another push up. So again, you guys, you can clearly see that this is range bound. In between, we have this volatility here, V for volatility. You've got strong impulse down and a strong impulse up. So for me, this is more range bound. Then guys, you can clearly see from this news candle here, because of course we had a long wick, this very volatile candle, we can start to see a very strong trend upwards. You can see that. And then of course, what happened at the end from this trending market phase, we entered a corrective market phase. You can see that here, guys, that the angle started to steepen out. You can see the steepness of this trend versus the steepness or shallowness of this correction, okay? And then what happened after that? We pushed down with this volatility, and again, we started to range. So essentially, what have we had so far? We've gone from a range into a trend, into a correction, back into a range, okay guys? And if I was to ask myself, was there any channel here? To me personally, I can't really see a channel. If I was to try and identify a channel, I would have actually taken all this off and created a small channel, well, a channel up here. But again, for me, this is not really an established or very clear channel. To me, this is more trending behavior because we have an overall strong amount of momentum to the upside across a short period of time, okay? So again, that is more trending market conditions. Now, so can we see any other market conditions down? As you can see here, guys, we've got impulse down into correction down. We had a push up, and then essentially we had a range here. We impulsed up, and then again here, what's happening here, guys? We're having this, again, a little correction here and an impulse down. So can you see, guys, we've gone from an impulsive phase to a corrective phase, to a ranging phase, to impulsive phase, to a corrective phase. And then as you can see down here, guys, we have this little, essentially correction slash channel moving downwards. So again, this is exactly the reason why I've broken this video down into these 4 market phases. It keeps it nice and simple, and essentially you're able to identify what kind of market phase do you want to enter. So like I said before, this should be at the very top of your checklist so that you know, if you're a trend trader, when to avoid ranging market conditions. Right guys, I'm going to end this video here. I hope you enjoyed this one. If you wanted to talk to me about anything that I've explained in this video, then feel free to write down in the comment section below. I'm happy to go into more detail into these different market phases if you'd like me to. If you'd like to see that kind of video, then please write it down in the comment section below. But for now, if you enjoyed this video, don't forget to give it a thumbs up, and if you're enjoying the content on my channel so far, please do consider subscribing. It will help me massively, and it will of course encourage me to make more great content for you guys like this one. But for now guys, I hope you enjoyed this video. It is so important to understand market phases because it tells you when you want to be a bit more active and look for very clear setups versus when you want to sit on your hands, be patient, go and play golf or exercise or do whatever you like when you're in range-bound conditions, of course, if you are a trend trader. But for now, guys, I hope you have a fantastic trading week. Take care and peace.